Welcome aboard, everyone. Today, we're diving into the fascinating world of finance and investing. This realm, often seen as mysterious and complex, is actually a fundamental part of our everyday lives. Whether we're buying a cup of coffee or planning our retirement, finance is involved. It's the pulse that keeps the world's economy alive and thriving. Now let's demystify this a bit. Finance, at its core, is about managing money and value. It's about making decisions on how to allocate resources today in order to reap benefits tomorrow. It's a system that enables transactions, fuels businesses, and supports economies, both local and global. But where does investing come into play? Well, investing is a crucial part of finance. It's the act of committing money or capital to an endeavor, with the expectation of obtaining an additional income or profit. You see, when you invest, you're putting your money to work. You're giving it a chance to grow, to multiply, and to secure your financial future. Investing can take many forms. It could be as simple as putting your money in a savings account, or as complex as buying shares in a multinational corporation. It's not just for the Wall Street tycoons or the Silicon Valley tech moguls. It's for everyone. And the beautiful thing about investing is that it can be tailored to suit your personal financial goals and risk tolerance. But why should you invest? The answer is simple. Investing is the key to financial freedom. It offers the potential for wealth creation and financial security. It's a way to save for retirement, fund your children's education, or even achieve your dream of buying a home. Investing can help you navigate life's financial journey and reach your destination with confidence. So, that's your first glimpse into finance and investing. Intriguing, isn't it? Now let's demystify finance. It's not as complex as it might seem. First things first, let's talk about income. This is the money you earn, whether it's your salary from work, profits from a business, or returns from investments. It's the fuel that powers your financial engine. Next up, we have expenses. These are the costs you incur in your day-to-day life. Think rent or mortgage payments, utility bills, groceries, and that morning coffee you can't do without. Expenses can be fixed, like your monthly rent, or variable, like dining out or entertainment. Now, what happens when you subtract your expenses from your income? You get your savings. Savings are what's left over after you've paid all your bills. They're your financial safety net, your rainy day fund. They're what you tuck away for future goals like buying a house, starting a business, or retiring comfortably. But what if your expenses exceed your income? That's where debt comes in. Debt is money you owe to others. This could be a mortgage, a student loan, or credit card debt. While some forms of debt can be useful tools when managed responsibly, too much debt can become a burden, so it's important to keep it under control. Speaking of control, let's talk about budgeting. A budget is a plan for your money. It's a way to ensure you're living within your means, saving for the future, and still enjoying life today. It's about making conscious decisions about how you spend your income so you can achieve your financial goals. Lastly, we have financial planning. This is the process of setting, planning, and managing your financial goals. It involves evaluating your current financial status, setting short and long-term goals, developing a plan to achieve these goals, and regularly reviewing and updating your plan. So, income, expenses, savings, debt, budgeting, and financial planning. These are the building blocks of finance. They're the tools you use to build your financial future. And there you have it, the ABCs of finance. Simple, right? Scene script. Ready to venture into the world of investing? Hold on tight, here we go. Just like embarking on a thrilling ride, starting your investment journey is both exhilarating and a bit daunting. But no worries, we're here to break it down for you. Let's start with the basics. There are several types of investment vehicles you can consider. Stocks, bonds, and mutual funds are among the most common ones. When you buy stocks, you're purchasing a small piece of ownership in a company. If the company does well, your stock increases in value. On the flip side, if the company underperforms, the value of your stock may decrease. Bonds, on the other hand, are like loans you give to a company or government. In return, they pay you interest over a fixed period and then return your initial investment once the bond matures. Then there are mutual funds, which pool money from multiple investors to invest in a diversified portfolio of stocks, bonds, or other assets. They're managed by professional fund managers who decide where to invest the pooled money. Now, let's talk about risk and return. In the world of investing, these two go hand in hand. Higher potential returns often come with higher risk. This means you could make a lot of money, but you could also lose a lot. That's why it's important to understand your risk tolerance before making any investment. This brings us to the concept of diversification. It's the practice of spreading your investments across different types of assets to reduce risk. Think of it as not putting all your eggs in one basket. Diversification can help protect your investments from the volatility of the market. Remember, everyone's investment journey is unique. What works for one person might not work for another. It's all about finding what suits your financial goals and risk tolerance. So that's your primer on investing. Exciting stuff, isn't it? Now, how about we explore some strategies to make your investing journey successful? First up, let's talk about long-term investing. This is a strategy where you buy and hold your investments for an extended period, typically years or even decades. The idea here is to ride out market volatility and capitalize on the overall upward trend of the market over time. It's like planting a tree. You don't expect fruits overnight, do you? Patience is the key. Next, we have dollar cost averaging. This is a technique where you invest a fixed amount of money at regular intervals, regardless of the price of the investment. This way, when prices are high, you buy less, and when prices are low, you buy more. It's like shopping on sale. This method can help mitigate the risk of making a large investment at the wrong time. Another strategy to consider is value investing. The essence of value investing is buying stocks that appear to be undervalued by the market. In simpler terms, you're looking for bargains, stocks that are cheaper than their intrinsic value. It's like finding a designer dress at a thrift store. But remember, it takes a keen eye and a lot of research to spot these hidden gems. Which brings us to the importance of research and informed decision-making. Investing isn't a game of chance. It's a game of skill and knowledge. So, take the time to understand the companies you're investing in, their financial health, market trends, and economic indicators. This will help you make informed decisions and reduce risks. Finally, remember that diversification is key. Don't put all your eggs in one basket. Spread your investments across different asset classes and sectors. This can help minimize risk and maximize returns. With these strategies up your sleeve, you're well on your way to becoming a savvy investor. We've covered a lot today, haven't we? Let's tie it all together. We started by unveiling the vast world of finance and investing, shedding light on its intricate workings and the potential it holds. We learned that finance is not just about money, but also about how it's managed, invested, and grown over time. It's the art of making your money work for you. Next, we dove into the basics. We discovered the fundamental concepts such as stocks, bonds, mutual funds, and more. We touched on the importance of diversification, the magic of compound interest, and the role of risk and reward in investing. We learned that understanding these concepts is the first step towards becoming a successful investor. Then we embarked on the start of your investing journey. We explored the different avenues available for investing, from traditional options like stocks and bonds to alternative options like real estate and cryptocurrencies. We emphasized that the best investment strategy is one that aligns with your financial goals and risk tolerance. After that, we delved into strategies for successful investing. We discussed the importance of setting clear financial goals, doing thorough research, and staying patient and consistent. We also highlighted the significance of keeping emotions in check and not letting market fluctuations dictate your decisions. Now, as we wrap up, remember this: the world of finance and investing is vast and ever-changing. The knowledge you've gained today is just the tip of the iceberg. There's so much more to learn, explore, and discover. So keep your curiosity alive, continue to educate yourself, and don't be afraid to ask questions or seek help. Investing isn't a get-rich-quick scheme. It's a journey, one that requires patience, discipline, and continuous learning. But with the right mindset and strategy, it can lead you to financial freedom and help you achieve your dreams. And that's a wrap, folks. Remember, the world of finance and investing is at your fingertips. Dare to dive in, and who knows where the journey will take you.